Okay, so let's talk about who should file tax return. You have to file a tax return if you have income to declare. You want to apply for GST credit, or Revenue Canada has sent you a letter or request to file a return. If you want to receive Canada Child Tax Benefit or Universal Child Tax Benefit, if you want to continue having your pension such as Canada Pension Plan and Old Age Security. In all such cases, you must file income tax return. Now let's talk about what are the deadlines for filing tax returns. Deadline for filing personal tax return is April 30th. And if for deceased people, there is extension of 6 months. So if somebody dies prior to the deadline for filing tax return, then basically there's an extension of 6 months. For self-employed people, we're talking about sole proprietors and partnerships. The deadline for filing tax return is June 15th. And for corporations, the deadline is 6 months after their fiscal year end. Now what happens if you don't file by the due date, or we call it deadline? There's a penalty which is 5% flat plus 1% per month to a maximum of 12 months. For example, if you owe $1,000 and you're 1 day late, the penalty would be 5% of $1,000, which is $50. Plus, on top of penalty, Canada Revenue Agency also charges you interest, which is accrued on daily basis. Now, in this course, we are focusing on personal taxation. What's the taxation year for filing tax return? For all personal tax returns, we are filing all the income and expenses from January 1st to December 31st. Now, we have different types of residents in Canada. We're going to talk about, first of all, we're going to talk about full year residents. Who are full year residents? Full year residents are people who are living here. They're required to file their tax return on their worldwide income, and basically file the return before the deadline. Next type of residents, we have part-year residents. Part-year residents are people who are new immigrants. They're entering Canada, they're establishing their residential ties in Canada. They basically didn't have any ties in Canada before entering, or people who are leaving Canada for good, which are migrants. So basically what happens in these cases for part-year residents, they only declare the income from their date of entry to December 31st, or from January 1st to the date they left Canada and they're not returning back to Canada. And they're required to declare worldwide income for part of the year. After part-year residents, we also have residents called deemed residents. And deemed residents are people who they can be physically present in Canada, or they may not be physically present in Canada. For people who did not have any residential ties in Canada, for example, visitors who have stayed in the country for over 6 months and they are working in Canada, they're required to file a tax return on their worldwide income for that full year. And talking about people who are not physically present in Canada are government employees, or such as our Canadian forces overseas, people who are working for consulate and all that. They are also required to file tax returns on their worldwide income. And last type of residents we have are non-residents. Non-residents are people who do not have any ties in Canada, but they have income from Canadian sources. For example, you can be non-resident of Canada but still hold a real estate property, investments, bonds, and all those type of properties in Canada. Non-residents are normally not required to file tax return because there is a withholding tax which is taken from these investments before the funds will leave Canada. So basically we have just covered 4 types of residents.